So now we're entering the third stage. The beauty parade has taken place, the documentation, the submission is on your desk, Ellie, and now the ball is in your court. Another sporting expression there. So the ball is in your court, Ellie. What do you do with the submission? What's the next step? I mean, what do you do?
Yeah, so I think for me then, it depends how much engagement we've had with the submission process, but it's then a case of understanding what I'm being asked to quote, what is the risk. I'm very lucky and we're very privileged at Rising Edge that actually that submission and the data and fact finding is done by AI. So that's all done in the background from me, which leaves me and my time free to actually delve deeper to understand kind of who is this client? What are they doing? How long have they been doing it for? How careful are they with their financials? How up to date with regulatory issues are they? How publicly present are they? I think we can all think of one or two directors and officers that are very public, and that is another risk factor. Who are they? What are they doing as individuals? This is an individual policy providing individual cover in some cases. And so you want to understand who these people are and how they work together as a team. What are the board talking about at their meetings? What are they concerned about? What are the press saying about them? Or what are the regulators saying about them, if at all? Are they in a very heavily regulated industry? I think then you start to look at who are these people and who is this client in comparison to the wider industry? Who are their competitors? Where do they sit in the value chain? Where are the issues that could come in there? Or are they in a particularly regulated industry that actually I need to understand that their board of directors have the knowledge and they have the understanding of the regulatory hurdles they could be about to trip over? And so I'm looking at all of that information, and then you're kind of looking at the very solid facts. So you're looking at financials, you're looking at kind of insolvency concerns. As Leanne was saying earlier, it's one of the more pertinent ones, especially right now, but it's also the easiest to underwrite because at least on the insolvency point, at least you have the facts in front of you. You can look at the numbers and you can understand where the client's going. Even better if you've had a client meeting and the client's told you how they're going to spend the cash that's sat on their balance sheet.
Assuming the information is fair, right? There's no kind of like accounting fraud, right? Which is something that you have to do.
That one, yeah, again, and that comes down to looking at who their advisors are, which professional firms is this board dealing with. Do they see the value in paying for top tier lawyers, top tier accountants, or actually have I never heard of the accountants that are working with them? And actually, is that a point of concern for a company with $1 billion on their balance sheet? And so it's kind of looking very specifically at the client, then you're looking out and kind of looking at who their advisors are, who their competitors are, where they sit in the value chain, and actually have they engaged with all those people correctly? Do they have the prior knowledge and experience to do so? Do they have bad press? Because actually bad press can lead to D&O claims in itself, or it can be an indicator that that's the direction they're going in. Or is it a case of it's bad news for this week, but actually the client has already explained the story and the direction they're heading in, and actually the restructure that the press is calling for is already underway, and the board understand that they need to be more conservative with their cash, and that's the direction that the business is now heading in. And I think it's just about understanding who they are, where they've come from, and then where they're going. And beyond that, understanding where they would then sit within our portfolio of D&O clients, and actually looking at the statistics we have available to us, the publicly available information and the information that we have in-house, to compare them then against their peers, both in terms of size, territorial location, wherever they are. If they're a worldwide risk, are we understanding that some areas that they're operating in can be riskier than others? And then you're looking to kind of map that risk against our portfolio and look at where we can get to possibly in terms of quoting. And then it can be back to the broker really to have a conversation around if they're building a larger tower, where do they see our position on that tower? Are we looking to kind of engage at the primary level, and therefore do we need to have a follow-up call with the client to understand all of these issues and start to build that relationship? Or is it actually that there's already been a big tower built elsewhere and we're speaking to Robert where some maybe 50 million of underlying has already been built in the US, and now we're having a capacity conversation. And do we need to understand whether we can get to the right price that the tower's already been built at? And is that going to be acceptable for us? Do we think it's rate adequate? And so there's two different kind of steps there, whether we're heading down a route of we're building the tower ourselves, we need to look through all the terms individually, and we as a primary underwriter are making those decisions and we're having those conversations with the broker. Or is it a case of we're building a tower, these are the terms as we have them, and then having a conversation with the broker around do we see that tower and where we would sit as rate adequate?
So Ellie, that was kind of like really thorough in terms of like demonstrating, like the all the different steps and all the elements of the underwriting process, which to summarize are in two steps. One is like the risk selection, and then you have the risk pricing. Now, if we go back to what we discussed so far in terms of like the risk mapping and preparing the submission, to what extent is that part of information that is delivered to you by the broker guiding you in making these decisions versus other source of information that you may get separately? What percentage would you say you rely on the submission to make these decisions versus the rest, and what is that rest?
Yeah, so I think it's a pretty easy one in the terms of the risk selection piece. We have pretty strong relationships with our brokers. We're very clear on our strategy as an underwriting team. And so most brokers would understand what would sit within our risk appetite. I would say the yes or no risk selection point should be a relatively quick one. I should be able to say yes or no. 95% of the information I need to get to that decision should be sat within the submission. I would hope 100%. That last 5% that I would be looking for is kind of very much is there any bad news that's been hidden by the broker, not been highlighted by the broker? So is there some really bad press currently around this client or their industry that actually means for now it's not one we would want to move forward into quoting? So I would say 95% of the information I would need to do the risk selection process should be sat within that submission. And actually, I would hope that I would be able to do that before even receiving the full submission. It should be very easy for me to say to a broker whether something would be an appetite or not, over the phone, over a coffee, very quick, yes or no. And so I think...
How about the pricing?
The pricing can be more difficult. I think it depends how regularly you see that type of client. For example, biotechs, we see an awful lot of US traded biotech. We're very up to date with where our pricing model would be happy to write those, where we feel comfortable in that space. Different types of biotech, for example, we would know the litigation rates off the top of our head. Some risks can be slightly more difficult. So something that's a new piece of technology, for example, specific areas of blockchain that actually, first of all, I need to spend some time understanding what that client does before I can start to even say yes or no and then look at pricing. But actually, it can be more difficult to kind of understand how that client would fit within our wider portfolio. So I think that can be a bit of a difficult question, just depending on how often we see that type of client, how well we know the client in terms of what they do and understanding exactly what they do. For example, if we had a biotech that are doing some really great work in the oncology space, but actually they're about to add in some cannabinoid exposure or something else that's going to change their risk profile, those are the bits that I'm looking for. So confirming a price takes slightly longer because then you're starting to kind of move down the road of understanding the risk more and doing a deeper dive into the underwriting, both in the submission, but then I would say 50% of what I'm looking at is the submission and the attachments, possibly. And then the other 50% is kind of public domain, what's available. If they're private, then obviously we rely far more heavily on that submission and those submission documents and any conversations we're able to have with the client, just because the level of public information around them isn't the same. For a publicly traded risk, whether it's in the US or in London or anywhere else for that matter, most of that information is publicly available. So I wouldn't be relying so heavily on the submission itself. Once I've received a submission on a publicly traded risk, I understand what I'm looking for, who the client is, and then I'm stepping into the big wide world of understanding kind of what information's available publicly about them. And then the final step is bringing it back in-house and running it through our rater and understanding the information that's available to us both through kind of what our AI's pulled out from the submission and elsewhere, and then what's maybe what my client meeting notes say, or what conversations have we had with the broker? What should I be looking for in the press? What should I be trolling through their website, getting right to the bottom of this page to understand this bit that the client might be moving into? For example, cannabinoid exposure, if that's something they're looking to go into in the next 12 months, it's absolutely something that I need to be doing a fine-tooth comb on to understand that that's the risk and there's going to be a change. So it's a case of, I guess, on the risk selection point, hopefully that's quick. I would hope that in lots of instances, the broker's already helping us with that, and the brokers are experts in what they do, and their job is to bring the right risk to the right underwriter. So a lot of that job is already done for us. And then, the underwriting process would start into a much deeper dive, probably 50-50 from the submission and from what's publicly available and what else is out there about the industry in general for the client are operating in.
Where does the AI feature in? Just the submission?
Yeah, so the AI for us is a very small part of what we do. It's for us, it's a processing point. It's to enable us to be much quicker, much faster, and have much better data in-house to base our underwriting decisions off. So it's very much at the front stage. When you send me a submission, I would be sending it straight to our AI, which is ring-fenced, it's in-house. That data is not going out into the public space. It's then data scraping for 25 to 30 key points that we've told our AI bots that we would like to see these for a very quick, think of it as like a front page news about this client. We're looking for very quick solvency statistics, where they're operating. It's doing a sanctions check. It's checking the director's history in terms of, are there any sanctions issues there? Have they ever been investigated by the FCA, for example? And so it's just very much a headline news piece from the submission for those brokers who aren't doing that job for us, really. It's done on all our submissions, but the good brokers, I would say that front page news is already their cover email to the submission. But it provides it for us across all clients, just to enable us to take on all the data that we would need to take on without spending lots of underwriter time going through submissions, trying to find these very specific bits of information. The AI would go in and find those for us.
So we're still in that third stage, about quotation, where art meets science. You've used all that data, and then you use all your experience and intuition to kind of like decide whether you would select and write this risk and then price it. So now you're going to send that to the brokers. Now we're turning back to you guys. So firstly, form over substance. Does it matter how Ellie sends you that information back? Does it matter whether it's like just an email with like 3 bullet points and a number, or does it matter that actually it's nicely presented with these beautiful graphics that we're producing and spending time to actually put a document in place? Does that document ever ends up on the client's desk? Or does it matter? So first quick question, form over substance, does it matter?
Sure. I think that it's for you to know your clients and your brokers in that instance. So for us, no, it doesn't matter because we're providing very nice, white labeled, pretty documents to our clients with those quotations in it. So other brokers might not have that facility or might not prepare those pretty quote packs themselves. So they will be relying on yours. So I think it depends on a broker. But for me, no, I just need the information from you of what you would like to do, what your offer is to the client.
Good to know. Robert, how about you from a wholesale standpoint? Because again, you're kind of like a step, between, as you said before, the retailer who works with the client and then the market, specifically here, the London market. So form over substance, what's your verdict?
It depends. And I differentiate between wanting an indication and wanting a bindable quotation, right? So at times we need to assess whether the ultimate insured actually does have interest in the primary or excess quotation. So for us, what's important is speed. And once we get the go ahead, we can proceed to issuing a formal quotation. Similar to what Leanne is saying, we issue the formal documentation and we ask the underwriter to review and sign that off. So from a form standpoint, we like to have control over that to ensure the quality assurance that our retail broking partners expect.
Very good. So form over substance, I think the debate is closed. Now, regarding substance, let's talk about the substance itself. So now you've received the quotes from Ellie and her peers in the market. So how do you kind of like sift through all these different quotes in terms of to determine, firstly, who you want to select to maybe be the primary, to lead, to be followed, excess? I mean, how do you build all of this? Because in a market like just the London market itself, let's say you have like 20, 30, 40 markets that you may have gone to. And so that's a lot of feedback that now you need to kind of like put in form. So how do you do that?
Sure, I'll just take it back one step. So actually, during these client engagement meetings you're having as a broker, you will set the marketing strategy.
Okay.
You will help them understand what the market conditions currently look like, where their policy currently benchmarks in that, and what they believe that they want to achieve.
So that's managing expectations.
Absolutely so. And once you've managed those expectations, you've set a marketing strategy with the client. And the reason I say that is that I still really believe that continuity is super, super important. I think we lost a little client buy-in through the last hard market on continuity. But again, each client on its own merits. You know, if somebody's going through a difficult time, restructuring, transactions, listings, raisings, anything like that, mergers, I would be setting my clients' expectations that you probably need to stick where you are. These people have understood your business throughout this whole cycle. To move now would not be the right thing to do. However, we can always check options. Otherwise, you know, it's setting that strategy with the client and saying, look, these are your current insurers. This is the available pool of other capacity. Let's go and check them. You know, the insurance world is a market. I think sometimes as brokers, what we wrongly do is assume we have the best cover, the best price, assume the insurer down the road doesn't write pharmaceuticals or tech companies or a particular territory. And I think we need to constantly be challenging our own assumptions just to check that we have the right policy, the right coverage, the best premium for the client. So that's what we do. And then we put the strategy in place. We go to the market as agreed with by the client, and challenging those assumptions is something that we always need to do. And I think that, you know, we can all get so driven on price, but at this point we need to be just checking the policy after those conversations with the client. Is where they're headed, is what they're doing, does that fit the wording? You know, are there things we need to change on the automatic kind of basis? Are there things we need to consider in there for them? So actually we need to have both a view on terms, the coverage and the pricing. We go to the market and we receive the quotes back. And then we're going to sit down with the client. We're going to give them the option of their current insurers and their current tower and our thought process on that. And then we're going to present the new options. And you're probably going to say, well, how do you present the new options? You know, what advice do you give them?
How do you present the options?
Yeah.
What advice do you give them?
Yeah, I mean, it can be quite difficult because we are lucky in the London market. We sit, you know, central to the insurance world, I would say, and we've got some amazing capacity and some really talented specialists. You know, let's not forget, you know, D&O is a specialism. I would like to think we're specialists, and so are the underwriters. So it's very hard to pick one against the other unless there's an obvious price. You know, what someone may not have an appetite for, others may at different points, and that's an easy one to look at, isn't it? But when everybody's similar and the same, I think as a broker, you have to bring yourself to the table. And I think through this whole process, that's actually an important point, that people want to deal with people, not robots. You know, having rapport with your client, having rapport with the market, and then back to you. I mean, it just makes everything so much more efficient. The only other advice we can give them on that capacity is obviously rating, but secondly, our own experience with them. You know, something may look shiny and golden and wonderful, but we've had terrible claims experiences with them. And I think as a broker, we need to say that, you know, absolutely, there's not a problem. You'll get your claim paid, but it's really difficult or it's really very slow. And that's part of the job we have to do, and something we're engaging with our insurers about all the time on the claims process as well, because that really does affect things, because that's what they're buying the policy for after all.
Robert, the wholesale market is a different animal, right? All on itself. I mean, you said it early on, one of the key criteria is speed, because the reality is that you're also competing with the retail in whatever jurisdiction it was. I mean, you mentioned here more about the US, but it could be any other retail market. So it's really speed. So other than price, how do market differentiate themselves other than speed and price? Is there any way that the market can differentiate with you, or this is really kind of the rule of that game in wholesale, speed and price?
Well, coverage. I mean, coverage, I think, is paramount in something as sophisticated as D&O. Leanne mentioned earlier claims. What is the claims handling like at that insurer? What is the underwriting team like? What's their continuity in the space? There might be other objectives that the client has identified in that sort of renewal strategy that you agree. They want geographical diversity in their program for a variety of reasons. So it's a multifaceted decision typically. It's not generally just go with the cheapest price and job done. This is, again, part of the conversation that you'll have with the retail broker about where you will slot in. What I would say is that the underwriting continuity, their familiarity with the client in that space, in that territory, is very important, right? So they'll want to know that there is commitment from that insurer to said territory, right? That it's not just a 1-2 year type gamut. And that is something that they would look to the London broker to advise upon.
So now you received all these quotes from the underwriters. You sifted through them through different lenses: cover, service, pricing, reputation, etc. You sit down with the client. You guide them together, I guess, to come up with like the placement decision. And now the decision is made. So it's binding time. How does it work actually? In terms of like, if I go to a coffee shop and I get my coffee, this is pretty clear. I get my coffee, I paid, I know this is now my coffee. How does it work in the world of insurance, when you actually bind? Like, what does it mean?
It probably is going to sound quite antiquated, actually, because there's not like a magic button you press on something and suddenly all these different things pop up: cover bound, cover bound, cover bound. It's actually quite a laborious task that you will then have to contact each underwriter separately, confirm to them full policy terms and conditions, and let them know they have the order and ask them to confirm cover. That can be done on an email. Some insurers produce a binder at this point, so more of an official document. As we're sending these emails and receiving these confirmations that cover is bound, we're preparing the actual policy documentation behind the scenes. That then, the Holy Grail is pre-inception, but not all orders come early enough pre-inception. So you get the slips done, and then they're put on to electronic placing systems that exist in the London market and are signed off by underwriters. Can take a little bit of chasing, but for you, we have to be onto that. That's how it works.
Is it similar in the wholesale world?
Yeah, just to back up one step, I'd say, try very, very hard to ensure that any subjectivity that is outstanding has been satisfied prior to binding. I think that's something that frustratingly we sometimes see as sort of the lagging answer to a subject to item. So assuming that you get everything tidied up, I'd say very similar. Again, speed is really important for us. So we work off of basically a draft policy. So as soon as we get the bind order, the underwriter confirms, and we put it on documentation on PPL for signing. So there's that traceable audit trail.